Hey there. Today, we're tackling a question that many budding entrepreneurs face, which is sole proprietorship versus LLC. Before we dive in, let's clarify what each of these terms means. A sole proprietorship is an unincorporated business that's owned by the individual running it. A sole proprietorship is the default choice for anyone who runs a business but hasn't set up another formal business structure like an LLC. As a sole proprietor, there's no separation between your personal and business assets and expenses. You are personally responsible for all your business's debts and obligations. A sole proprietorship can only have one owner. If you take on a business partner, your unincorporated business will become a general partnership. Individuals that do a lot of contractual work, such as freelancers, consultants, and personal trainers, often choose to file their taxes as sole proprietors. This is the easiest way to go if you're just starting out or you're not yet making enough profit to justify the costs of an LLC. However, even if you've been in business for decades, a sole proprietorship may still be the best option, depending on the type of business you run. Now, let's talk about LLC, which stands for Limited Liability Company. An LLC is a business entity that's created by filing paperwork with your state. An LLC can have one owner or many owners. Once formed, an LLC has its own legal identity that's separate from you, the owner. Because of this, a business creditor cannot legally go after your personal assets if your business is sued or unable to pay its debts. Additionally, an LLC's bankruptcy is considered separate from the owners. If you have employees, an LLC can also help shield you from liability for your employees' actions. There are a few reasons to open up an LLC instead of operating as a sole proprietorship. First, you want to expand the company to more than one owner in the future, which is easy with an LLC. Or you want to protect your personal assets from potential financial and legal liability. Lastly, you want to take advantage of any applicable local, state, or federal tax benefits that come with forming an LLC. In summary, setting up an LLC could position you for growth and protect you from liability. People also consider opening up an LLC when they reach a certain income threshold in their business, and the additional fees and paperwork make sense from a tax perspective. As a sole proprietor, there's no separation between you and your business. You're not obligated to separate your personal and business bank accounts and credit cards. However, opening up a different checking account for your business will make it easier to identify business expenses when it comes time to file your taxes. With an LLC, it's important to keep your business finances completely separate from your personal ones. You'll need a business bank account, and you'll sign documents and contracts on behalf of the business, not as yourself personally. Keeping things separate preserves your liability protection because it shows that the LLC truly has its own separate identity. Tax-wise, an LLC offers more options than a sole proprietorship. All sole proprietors are self-employed. You'll list your business income and expenses on Schedule C of your personal tax return, and you'll pay personal income tax on your profits. You'll also be responsible for paying your own Social Security and Medicare taxes, otherwise known as self-employment taxes. That's all for today's video. If you found this information helpful, be sure to give us a thumbs up and subscribe to our channel for more content like this. Thanks.